Hello viewers, welcome to my channel. I'm Hasham Ali Khan. Now I'm going to start the next problem, that is problem number 8 on income from business or profession. So already 7 problems I have explained you in the previous videos regarding how to compute the profits and gains of business or profession by applying the provisions of Income Tax Act 1961 for the assessment year 2021. So if you have already watched, then you might have got a good grasp on the topic of this profits and gains. If you have not watched earlier videos, I suggest you to go to the playlist of my channel. Select the subject Income Tax 1 for the assessment year 2021. Select the topic profits and gains of business and profession. Watch the earlier videos. If you join in between, you may not be able to understand. So keep a rhythm of watching one by one video, then only you can be able to enjoy the subject Income Tax 1. So now I'm going to start the next problem, problem number 8. But before starting the problem, I expect my viewers to have a printout of the problems which I have given in the link under my description. So take a printout and keep it ready before start watching the videos on problems. 8th problem. Mr. Anil Kumar furnished the following particulars for the assessment year 2021. Compute income from business. The profit and loss account is given. The last net profit as per profit and loss account is 4,38,000. So we begin our calculations by taking the profit as per P&L account. So you can see computation of income from business of Mr. Anil Kumar for the assessment year 2021. Net profit as per profit and loss account 4,38,000 given in the profit and loss account. So we add inadmissible expenses. The expenses which are debited to profit and loss account, but Income Tax Act has disallowed, not allowed. So we have to see the debit side. Which are the items which are specifically disallowed by Income Tax Act? Those items we add back. Similarly, less incomes chargeable separately. Some incomes are there which are credited to profit and loss account, but Income Tax Act will not say that this is business income. These are the incomes which are taxable separately under other heads of income. Income from house property, capital gain or other sources, other heads. So we have to deduct those incomes which are not business income, subtract. Then lastly, allow the deductions which are given by Income Tax Act but not debited to profit and loss account. In this way, we are going to compute the income from business. So before starting the profit and loss account, first we'll have a glance on the adjustments. Additional information: salary to staff include Mrs. Arun Kumar's salary 10,000, who is working as typist, and Mr. Arun Kumar's salary 24,000. That means this business, the SSC is Mr. Arun Kumar. Mrs. Arun Kumar, wife, she is a typist in the business and she is getting a salary of 10,000, and that's 10,000 rupees is included in salary to staff 2,34,000. In profit and loss account debit side, first item to salary to staff 2,34,000. And adjustment, it is saying this salary includes the salary paid to wife. Income Tax Act has a provision. Income Tax Act says any salary paid to a relative is allowed as deduction up to reasonable amount. Up to some reasonable amount. If unreasonable amount is paid, then it is disallowed, because it is the amount paid to relative of the SSC. Here Mr. Arun Kumar is the owner, is the SSC. Mrs. Arun Kumar, wife of the SSC, she is the typist. She is providing service to the business. So she got the salary of 10,000. It is allowed as deduction. So after completing the solution, you should give a note. You should write in working notes: the salary paid to a relative up to a reasonable amount is allowed as deduction by Income Tax Act. Hence, salary paid to Mrs. Arun Kumar as a typist is allowed as deduction. No adjustment, nothing. Salary paid to Mr. Arun Kumar, that means owner's salary, proprietor's salary, disallowed. Owner's salary is disallowed, proprietor's salary disallowed. Salary to staff includes salary of Mr. Naveen for a month, 32,000 rupees paid in cash. And salary also includes one salary paid to an employee, Mr. Naveen. 32,000 rupees was paid as salary in cash. Income Tax Act has a provision. If any revenue payment is made over 10,000 rupees, it should be paid through account pay check or bank draft or electronic mode. It should not be paid in cash. It should not be paid through bearer check. So whenever more than 10,000 rupees has to be paid, it must be paid only through check, account pay check or bank draft. Here Mr. Navin's salary was paid 32,000 in cash. It is more than 10,000. So Income Tax Act says 100% disallowed. So 32,000 rupees salary paid in cash is completely disallowed. Then a sale transaction of 50,000 is not recorded in the books of and the profit is 10%. Unrecorded sale. One sale of 50,000 was conducted, but it was not recorded. 50,000 sale was not recorded, and 10% is the rate of profit. So 10% of 50,000, 5,000 rupees profit on unrecorded sale, that will be added to profit. Last one, gratuity paid to staff is 20% in excess of the statutory limit. So if any gratuity is paid more than the statutory limit, it will be disallowed. So 20% of gratuity will be disallowed. This is the problem. Now we'll start the debit side of profit and loss account. Salary to staff, it is first of all, it is allowed. Salary to staff, it is allowed. But in this salary of Mr. Arun Kumar will be disallowed. So here you can see salary of Arun Kumar SSC, it will be disallowed, 24,000. And salary paid to Naveen, an employee, 32,000 rupees salary is paid in cash, disallowed, because it is more than 10,000 and it is not paid through account pay check. It is paid in cash, so 100% disallowed. Salary paid in cash in excess of 10,000, 32,000, fully disallowed. Next, interest on bank loan, allowed. Expenditure on promotion of family planning among employees. On the debit side of profit and loss account, one item is given, expenditure on promotion of family planning among employees, 3,000. Income Tax Act says, if the employer incurs some expenditure on promotion of family planning among the employees, it is allowed as deduction only for company SSCs, only for joint stock company SSCs. But here the business is not a company, the business of a sole trading concern, so it is not allowed as deduction. So in working note you should write down, amount spent, expenditure incurred on promotion of family planning among the employees is allowed as deduction only for corporate employees, only for corporate SSCs, not for others. Since the business is not a corporate SSC, so it is disallowed. So you can write expenditure on promotion of family planning among employees, 3,000. Next, goods and service tax allowed, GST will be allowed. Income tax disallowed, personal tax, income tax 2,000. Then comes gratuity to staff. So 20% will be disallowed. Gratuity to staff, 20% of 90,000, 18,000 disallowed. Reserve for future losses, it is not an expenditure. Reserve for future losses is not an expenditure, disallowed. Reserve for future losses. Reserve for bad debts, not allowed. Actual bad debts are allowed, but provision for bad debts or reserve for bad debts disallowed. Reserve for payment of income tax, disallowed. Income tax paid or reserve for payment of income tax, completely disallowed. Then car expenses, assuming that car is used for the business, so it is allowed as deduction. Office expenses allowed. Rent and repairs of building allowed. Municipal taxes of staff quarter. Now see, some staff quarter has been made by the businessman, by the SSC, and these staff quarter are allotted to staff members or employees. So as long as the employees are working with the employer, they can stay in the staff quarter. So if any staff quarter is made by the SSC and given to the staff and collecting the rent, rent is not taxable under income from house property, because the staff quarters are made for the smooth functioning of the business. So the rent recovered from staff quarter is a business income, and expenditure incurred on the staff quarter is a business expenditure. House property and staff quarter are different. If house property is given, the rent from house property is taxable under income from house property. But when staff quarters are given, it is assumed that staff quarters are made for the smooth functioning of the business. So rent recovered from the employees by using staff quarter is a business income. So expenditure incurred, that is municipal taxes of staff quarter, is a business expenditure, allowed as reduction. In working note, you should write this point. Then sundry expenses allowed. Depreciation on computer, car, furniture, building. See here, no depreciation is given in adjustment. In adjustment, no depreciation is given. So we make the assumption. Assume that whatever depreciation is debited to profit and loss account was according to the provisions of IT Act, according to the provisions of Income Tax Act. So it is allowed as deduction. No adjustment, nothing. Debit side, all items we have taken. Now have a glance on the debit side. Expenditure on promotion of family planning among employees, income tax, gratuity to staff, reserve for future losses, reserve for bad debts, reserve for payment of income tax, salary of Mr. Arun Kumar, and excess salary paid in excess of 10,000. Take the total of the inadmissible items, 1,15,000. Add up 4,38,000 plus 1,15,000, 5,53,000. From this, deduct incomes chargeable to tax separately. Any income which is credited to profit and loss account, but it is not a business income, that will be deducted. Now credit side, you see, by gross profit, it's a business income. Rent from staff quarter, just now I told it is a business income because staff quarters are made for smooth functioning of the business. Sundry receipt, it's a business income. Interest on bank deposit, it is taxable under income from other sources, not a business income, so deduct interest on bank deposit. Similarly, profit on sale of equity shares. Profit on sale of equity share is a capital gain. It's a capital gain. It is not taxable under business income, so deduct profit on sale. So deduct 17,600, 23,000 you deduct. 5,53,000 minus 23,000, 5,30,000. To this last adjustment, one sale was there 50,000, but unrecorded, the profit earned is 10%. So 10% of 50,000, 5,000 is the profit on unrecorded sale. That will be added. So profit on unrecorded sale, 10% of 50,000, 5,000, 5,30,000. This 5,35,000 is income from business or business income. That's all. So this is the end of problem number 8. Now I am coming to the problem number 9. Sri Ram is the proprietor of a business. His profit and loss account for the year ending 31st March 2020 is as follows. The profit and loss account is given. Last line, net profit 4,02,000. So we begin our calculations by taking this net profit. Computation of income from business of Sri Ram for the assessment year. Net profit as per profit and loss account 4,02,000. To this we add inadmissible expenses. The expenses which are debited to profit and loss account but disallowed. So here we'll see. But before going for that, we'll see the adjustment. Allowable depreciation 66,000. That means the depreciation which is allowed as per Income Tax Act is 66,000. So this 66,000 will be deducted. So depreciation is debited in profit and loss account will be disallowed. Profit and loss account depreciation was 40,000 given, debit side. That 40,000 will be disallowed, add back. So depreciation 40,000 will be disallowed, add back. Later on, deduction allowed as per IT rules, depreciation 66,000. This will be allowed as per IT rules. Second, brokerage paid for raising commercial loan. Brokerage is paid for raising commercial loan. That means the brokerage or the expenditure which is paid for raising the loan which is used for the business. It's a business expenditure. So brokerage paid is a business expenditure. Without incurring brokerage, we would not have got the loan. So to get the loan, we are paying the brokerage and the loan is used for the business. So it is allowed as deduction. So after completing the solution, you should write a note, working note, that brokerage paid to raise the loan is allowed as deduction. Bad debts recovered were disallowed earlier. Bad debts recovered was given on the credit side of profit and loss account. Last item, bad debts recovered 26,000. Adjustment, it is saying that it was disallowed earlier. In the previous years, sometime, the SSC has claimed the bad debt with the income tax department. Income tax department has declined, not given the bad debts. Not given the bad debts as deduction earlier times. Now that bad debts is recovered, Income Tax Act says it is not taxable. If it is allowed earlier, now it is a business income. If it is disallowed earlier, now it is not a business income, not taxable. So we deduct. Bad debts recovered will be deducted. See here, bad debts recovered, disallowed earlier, 26,000 will be deducted from the profit. Because it is not taxable now. Earlier problems we have seen, it was allowed earlier. So now it is a business income. First time we are coming across where it was disallowed earlier. Now it is not a business income. Deduct. Advertising expense incurred for insertion in a magazine released by a political party. Income Tax Act says advertising expenses revenue in nature will be allowed as deduction. Advertisement expenditure capital in nature will not be allowed as deduction. Similarly, advertisement expenditure incurred in a magazine which is published by a political party, it will not be allowed as deduction. So here specifically given advertising expenditure was incurred in a magazine which was published by a political party, so it is not allowed as deduction. That's all. So adjustments I have explained you. Now debit side, you see salaries allowed, general expenses allowed, then discount allowed, brokerage allowed, legal expenses allowed, advertising disallowed. Because advertising, it is given in the last line, the advertising was incurred in a magazine published by a political party. So you can see advertising expenses in political magazine disallowed, 18,000. Next, gifts to relatives. If gifts and presents are given to customers to promote the business, it is allowed. When gifts are given to relatives, it is assumed that it is not related to business. Disallowed. Gifts given to relatives are disallowed, 12,000. Bad debts allowed. Provision for bad debts disallowed. Provision for bad debts 15,000. Loss on sale of machinery, it's a capital loss. Loss on sale of machinery is a capital loss, so not allowed as deduction. Loss on sale of machinery. Depreciation, first of all, it will be disallowed. 40,000 rupees debited to profit and loss account, disallowed. Later on, depreciation as per income tax rules, it will be allowed. Then wealth tax. Wealth tax is a personal tax. Wealth tax is a personal tax, not allowed. So income tax, wealth tax, gift tax, not allowed as well. So wealth tax. Life insurance, LIC, life insurance company premium. Life insurance company premium, it is a personal expenditure. The life insurance premium should be paid by the SSC from his own pocket. It's a personal expenditure, but it is debited to profit and loss account. Not allowed. Life insurance company premium, 8,000, disallowed. So we have taken all the debit disallowed items. Take the total, 1,13,000. Subtract 4,02,000 minus 1,13,000, 5,15,000. From this we subtract incomes chargeable to tax separately, not a business income. See the credit side. Gross profit is a business income. Rent from house. Rent from house is taxable under income from house property. It is not a business income. So deduct rent from house property, 31,100. Next one, interest on securities. Interest on security is taxable again under income from other sources. It's not a business income. So interest on security will be deducted. Dividend. Dividend 10,000. So according to the provisions of Income Tax Act, dividend received from Indian companies are fully exempted from tax. Not taxable at all. So we deduct dividend 10,000. And then last one, Interest on debts. Interest on debts. That means sometimes a business will allow some credit period to the customers. Suppose the businessman has said that we are selling the goods on credit for a period of 30 days. If you have not paid the amount within 30 days, after 30 days, we'll charge the interest. So in this case, interest on debts is a business income. Interest on debt is a business income. So already it is credited to P&L account. Nothing should be done. Only in working note. Only in working notes you should write on interest on debt is a business income. Last one, bad debts recovered. Bad debts recovered, just now I told you it was disallowed earlier. Last line it is given. It was disallowed earlier. So bad debts recovered is not a taxable income. If it is disallowed earlier, it is not a taxable income. So it should be deducted. It should be deducted, 26,000. Take the total, 77,200 should be deducted minus 4,37,800. From this, deductions allowed as per IT rules, that is depreciation. Depreciation 66,000, deduct, we'll get 3,71,800. This is the income from business. So every problem we have seen that we have covered number of provisions of Income Tax Act. Every problem, so many new points. If you watch with full concentration, with full interest, then definitely you can get a good grasp. You can enjoy the subject of income tax. It's not a tough. The only thing is you must have an urge to learn the subject. You should think that the subject is interesting. If you are thinking that so many provisions, how we can be able to remember, then it's not your cup of tea. It will be very difficult for you. So don't get panicked. Watch the video from beginning till the end. Watch in sequence all the videos. Definitely you can be able to get a lot of interest in the subject of income tax. So I have completed 9 problems so far on computation of income from business.